Good evening, ladies and gentlemen. Welcome back to another episode of Stocks to Buy. We're going to recap the weekly insanity, kind of the top stories related to Microsoft. We're going to be talking about Black Friday. It was a reason I wasn't streaming on Friday. I tried to go shopping. I said, F that. I will wait till Monday or Tuesday. We'll talk about some of the stuff going on with the headlines around how good Black Friday truly was and what it kind of means for the markets in general. We'll take a broad view of the markets as well, and then dive into the stocks that I bought this week because I invested about another 1,000. I'm getting heavy aggressive. Really wishing it was just the end of the year so I could start just reloading the tax-free savings account and build that account back because it's so hard to sit on your hands when you know the insane amount of deals that are currently out there. And we're going to talk about those deals sitting within the financial sector because obviously it's where my mouth drools. And I'm going to show you the metrics behind why my mouth drools so heavily around these banks. And considering they're posting earnings this week, definitely something to watch. We're going to listen to Tom Lee. He's going to break down his thesis on FANG, the Russell 2000. We'll get a little bit of insight into the speculative side of the market with crypto toward the end of this as well. So it should be a fun stream. And I appreciate everyone stopping on a Sunday evening, especially on a long weekend for those in the U.S. I know the Canadians don't care. And as we joke in Canada, when Canada has Thanksgiving, nobody cares. But when the U.S. has Thanksgiving, no one shuts up about it. So let's get into this with first and foremost, Black Friday. So if you guys, I don't know if you went out shopping, but there was a lot of articles and a lot of mixed stuff with all the inflation and people complaining about how hard life is financially. And we've seen articles where Adobe kind of predicted that there'd probably be about $9.6 billion in online shopping sales. And we're going to see how that prediction turned out. But if you went to any other headline, you'd see things like inflation, longer sales season to weigh on Black Friday shopping. And I've been seeing a lot of videos like this too. If you, I'll give you a little quick insight because this is kind of, I don't like Black Friday. There's not a lot of sales, but this kind of represents how I feel about it.
Black Friday is dead. This year's footage of stores where people once trampled each other to buy half-price TVs show vacant aisles filled with merchandise advertising the same prices as last week. Yesterday's underwhelming Black Friday has left people wondering what exactly happened. I'm Robert Tolpe.
I love this kid because he looks like he's like barely 13. But anyways, I think it's really odd because I don't know what mall he's showing. And I feel like he's just taking like an exaggerative approach because when I went to the mall and I tried to go early because I got off work a bit earlier, I was like maybe 2:30, 3 o'clock. How busy can it be? And it was damn busy enough that like Apple, for God's sake, all of stores that does never have sales on any of their products was packed. Apple, like so packed. I mean, Starbucks, all these, like, why people? Why? So I just gladly left. And then my fiance's dad actually went into the mall to go for a walk later, like a couple hours after I left. And he just immediately said, yeah, this is just ridiculous. So I'm not really sure exactly what mall these people are going to, but everything I could tell, it really doesn't feel like a recession. And that's what they said last year for Black Friday. Recession, guys, gotta be worried. But then guess what? All of a sudden you're seeing articles like this. Black Friday shoppers spent a record $9.8 billion above Adobe's expectations in online sales, up 7.5% from last year. Though they are saying that sales are record highs pretty much across the board. It's slowing down in comparable to the percentages on a year-over-year basis. But still, like it just goes to show that the economy is alive and relatively strong. And if it says one thing, it says that e-commerce is still the way to go here. And it makes you ever more bullish on companies like Amazon and like just all this online and Shopify and companies like, even though probably Amazon's a better deal at this point. He looks like a nerd. It's good, man. I wish I was that crafty to start doing videos at that age. I wasn't nearly as on top of my game back then. There were some decent deals this year. What were you buying, Patrick? I mean, the TVs that I saw, because I just walked through like Best Buy and stuff, and the TVs were literally priced the same as they were like all the Hisense and the ones they want to get rid of. Not your crazy like OLEDs and stuff, but the kind of older models are still really cheap, and they were like a week ago. And honestly, if you go back on like Tuesday or Wednesday, like they continue to like even push the sales harder to try and get rid of the backlog that didn't sell on Black Friday. So I mean, it's kind of funny, but the whole of last week was pre-Black. Yeah, I agree. You're just seeing the same sales. It's not like Black Friday doesn't mean what it used to. I don't think expanded to several weeks this year. Yeah, I agree. It's like as soon as Halloween's over too, right? So anyways, yeah, I again, no recession. It seems good. The economy's good. Jobs are good. No one's complaining. So that was Black Friday, baby. I hope you guys enjoyed it. Like I said, I didn't do any shopping, but I'm going to get it done. I'll get my holiday shopping done here soon. I got some things to do for the family, but still, moving into some of the stocks this week. Did you guys catch Microsoft? Because, oh my God, Like this story is just so hard to wrap your head around. I had to spend like my fiance went down this rabbit hole and she was trying to explain it to me and I didn't understand it. And I had to go back and rewatch all the videos on it to even wrap my head around what happened here. Because if you missed it, Microsoft exploded. I mean, over the last month, it's up 14%. It continues to just rake into all-time highs. It is just crushing it right now. And this is all this drama with chat GBT, well, basically OpenAI and Sam Altman. And it's just, I'll try and like extrapolate some of the data, but I want to point out that I just don't believe now is the time to be buying these stocks. I like outside of cost averaging into maybe the Qs, if you just don't care, or like the S&P, which I'll continue to do, to buy these on an individual level, which me and my fiance have exposure to. This is where you just want to put the brakes on, because you look at all the metrics around this and you get the hype and you get the drama, but the growth rate is just not where it was coming out of the last decade. I mean, you look at the earnings per share and just how this exploded, and it's basically still just above. Yeah, we're hitting all-time highs, but it's not like growing exponentially like it has been, right? And we're trading at 36. What's the multiple on this right now? I mean, you're talking about 36.5, which is just well above the historical averages, right? Without the growth rate that you had during this period, like 30 to 32 made sense when the stock was just skyrocketing here, but where it's above that now, and you're just, I don't know. I just don't trust these tech stocks where they said, I think the time to buy them was literally a good year ago and buying that rally, which again, I kind of failed on that one, but good thing we do have some exposure. But even in comparable to Apple, right? Like Apple's trading at a 31 times multiple here and there's no growth. There's like the earnings growth has just been relatively flat, right? I mean, we're just not seeing anything out of this, but this is where everyone's hiding out. I hate myself to not buy Microsoft last December, but at least I went crazy in the Canadian banks this year. Canada always gets everything right. Yeah, so you don't feel bad about missing. I mean, every day you're missing something. We're going to talk about crypto and these like small caps, because I mean, there is stuff that's 100xing on a daily basis right now, and it's just showing signs that speculative market's coming back. But that's where my brain is like starting to like kind of flake out, because I'm like, we were getting to like reasonable values when the market started to come back a little bit. It got too over exaggerated. Tech crashed way too hard. Small caps crashed way too hard. And then like we just started coming back and it's like, okay, this makes sense. We're kind of where we need to be. And now we're like immediately back to like, this is unsustainable growth. Like it just doesn't make sense anymore. Unless again, earnings just continue to excel back to like 20, where again, what was Microsoft's earnings growth? The revenue was like what, 10% or something? Whereas like prior to this crazy crash, we were talking about like 20%, like the upper teens of growth, which we're not there yet. So why do they deserve these high multiples? But again, a lot of this for Microsoft is pivoted around this drama, which I'll give you the quick little anecdotal information across the spectrum of what happened here and why everyone's so hyped about it when it sounded horrible.
Fast moving and dramatic last 72 to 48 hours. And I want to start with the state of play. Where are we now? OpenAI says it's hiring a new CEO. We're reporting our efforts to get Sam Altman back.
Up a bit.
Tell us where things stand.
Well, first of all, Emily, it's great to be with you. On Friday morning, we were very excited, committed, and confident in our innovation roadmap to bring this next generation of AI to our customers. And we feel fantastic and capable of doing that. And we were partnered with OpenAI, and we were partnered with Sam. And that's exactly where I am on Monday afternoon, if you will, because we think that we can, we are leading in this next generation of AI technology. We continue to be committed to OpenAI, and we continue to be committed to Sam and Greg and the team, irrespective of where they are. And, I think about Sam has chosen multiple times now to work with us, and that's fantastic to see. And I think the real thing is that the capability that Microsoft has across the tech stack is what attracts great people like Sam, and people like Sam and, innovators like Sam when it comes to AI to come to us, and we're thrilled about it.
You incredibly quickly hired Sam as well as Greg. We are hearing that Sam wants to return. Investors want him to return to OpenAI. How would you feel about that?
Yeah, as I said, we really want to partner with OpenAI, and we want to partner with Sam. And so it is.
So he kind of just walks in circles, but basically OpenAI, there was some really integral drama that took place where basically Sam was essentially fired and the entire employee staff wanted to walk out with him. And the guy that got him fired said he deeply regretted my participation, which he says basically in the board's action, but it wasn't the board's actions. Apparently it was this guy's actions that kind of pushed him out. And I never intended to harm OpenAI. And it was so bad that they not only screwed this whole thing up, they went to hire like the biggest next competitor CEO to see if they could merge companies, if they could take over. Microsoft's like, we don't care if you work for OpenAI, come work for us, but they have a huge stake in it. Like Microsoft, all these big celebrities have huge stakes in OpenAI, and it's just become this mess, but it's all pivoted around Microsoft. And everyone's like praising Microsoft for being like having basically like if you play chess, they're like, they just got the king and queen, and they're like, they own this whole game. It doesn't matter how it turns out. It's basically just going to continue to give Microsoft, the upper hand over all of it. So very intriguing stuff when it comes to all this. And the only thing that like really made me laugh this whole time was that, like, can you just picture Bill Gates right now? I mean, I know it's hard. It's really hard to diamond hand an entire position over like your entire lifetime, because God knows I wouldn't have the guts to do it. But if Bill Gates kept his 49% stake, which right now I think he owns like maybe 4 or 5% or something. But if he kept his 49% stake in Microsoft up till today, he'd be the richest man in the world, worth almost $1 trillion. Again, post-divorce, as my fiance liked to remind me. She's like, would he still have all that money after the divorce? It's a good question. It's a very good question. So anyways, I'm just going to keep an eye on this, but I'll keep cost averaging the S&P, but there's no way I'm buying tech stocks up here. I mean, they're just, I don't know. From an individual basis, if you got them, hold them. But we'll talk about what to buy, where to buy, not as financial advice, but obviously what I'm doing with my money is I try and put my money where my mouth is, per se. But taking a look at this week, man, we're just getting back into a bull market. I mean, over the week, we got a lot of green across the board. You zoom out over the month, and there's nothing but green. Could have threw a dart at the board, especially with some of these tech companies. On the TSX side of the border, a little bit starker because, over the last week, we've seen a little bit more of a decline. But again, over the 30-day, it has been relatively green. And obviously, this is not going to load. That's good old TSX market for you here. Can we go 30-day? Give it to me, baby. There we go. Yeah, a little bit of pullback on the energy side, but we need oil to pull back. That's what's going to keep inflation down and give us this bull rally that we want to see in the specific stocks we're buying. And I got, again, quite a bit of capital in my corporate account that I'm going to pay out. And I'm just really sitting on like a powder keg of like an extra 10 grand that I really want to invest. So I'm just basically taking every paycheck I got that's already taxed in a regular brokerage account and just throwing it in. And for right now, again, just to keep it simple, because if it wasn't for keeping it simple, I would probably just be buying, basically like, one of these bank ETFs we'll talk about. I'd love to start buying TELUS back here in a lot of these infrastructure plays that, and I want to explain to you specifically why. I know I keep saying like they're going to have a rebound, but I want to explain to you why they're going to have a rebound. And again, we're not talking like tech kind of rebound here. I'm not talking about making 100 bagger here. Okay. That's not going to happen with these kind of stocks we're buying. But the reason we want to buy them, and again, I'm going to break this down from like a fundamental basis, is because your rate of return is going to be like, honestly, for the next 2 or 3 years, you could probably bake in a rate of return of somewhere up to 15 or 20%, just because the dividend yield's so high, and these stocks are going to rebound back to cyclical levels. And there's only one specific reason, and it really just comes down to, when the cycle comes to its finale and people are finally done with it all. But basically, to keep it simple, I just bought VDY, right? VDY gives me the largest exposure to the best financial stocks, and it just weights it down because I love Enbridge. I love, my telecom giants. And for now, it's just a simple parking place. So I can sell it at the end of the year and transfer it immediately over into my my tax-free savings account. Now, I don't think I'm going to see the best upside doing this, but for now, it's just a simplistic way to keep that exposure and get that high yield locked in, because I'm up like a couple $100. My average buy is like 39 something. So, I mean, we're up. It's trickling up. We're not talking about anything dramatic here, but if we do a comparable, like, for instance, my 2 favorite stocks here, the ones that I'm watching like a hawk, again, maybe I won't buy them, maybe I will, maybe I'll just buy one of these broad bank ETFs. But Bank of Nova Scotia is just, I can't help but wonder, and I can't help but just think to myself, where is this going to be in the next 2 or 3 years? Because I just cannot see it being lower. And again, there's black swan events, there's this, there's that, but you're getting a 7% yield that is highly sustainable, that is not going to get cut. And this bank is growing revenue, not as much as the other banks, no. But the reason that this is so intriguing is because the revenue is unchanged. But what has changed is the EPS. And the stock prices in these infrastructure companies have been following the EPS, right? Because EPS has fallen back down to, like, if you look at the EPS chart on this, it exactly looks like Bank of Nova Scotia's chart. Bank of Nova Scotia hit an all-time here back in 2021, and it literally cyclically follows the same kind of chart, which is so fascinating, right? If we zoom out and you just take a look at it, right? Like every time we get these leaps and troughs, it really just comes down to what the bank is able to post for earnings. And these earnings, again, are highly controllable because it's all based off macro events. Their revenue never really changes, right? It's just whether they have to put loan loss provisions aside. During the pandemic, there was issues. So there's just all these things going on that add to the expenditures that eat into the revenue, right? Which is what we're seeing with all these kind of recovery plays, in my opinion, as what I'm calling them, these kind of, interest rate recovery plays, because this isn't going to sustain. This is just a cyclical cycle that we're currently seeing here. And the PE multiple is actually within historical ranges, right? You're like, oh, the PE is at 9. You can't really judge this off the PE because if anything, it's higher than some of the historical averages. Yes, it is trading for a fair value based off its earnings per share. It's trading around its book value right now. So you're like, oh, so it's really should just be trading where it's at, but that's not the reality of it because the PE multiple has basically been compressing against the earnings, right? So it's just been like, when you look at this, you're like, this is going to go back up and then the stock price is going to go back up with it. And then the earnings, the price, the PE multiple is going to go up against the stock price and it's always going to be around 9. It's just going to follow the trailing when it starts to come back, right? So like I'm looking at this and I just can't help but think to myself that this is like an inevitability. Again, we're not talking about huge rates of return, and I don't know if we can get back to these levels up here, but even if we can go back up to here, I mean, the stock price is going to rebound. It's probably going to give you a good, 20 to 50% return. You're going to lock in a 7% yield, which is just going to compound the crap out of that over the next 3 years. And I'm not talking this is going to happen overnight either, folks. Like, this is why I'm hoping that the market doesn't like preemptively start like presuming this, and it's starting to. But as soon as there's a sniff of interest rate cuts and the economy's cool and we don't have to do loan loss provisions, and that'll come whether they do interest rate cuts or not. I mean, even if interest rate stays where it is, so long as these loose loans start to level off and everything, and they stop putting these crazy amounts of money aside, boom, earnings come back. And that could happen realistically this quarter for all anybody knows. That's the concerning thing for me because it's just kind of closing my window to buy it. But I'm really anticipating this is going to be about a 1 to 3 year thing. It's not going to happen overnight. It's definitely going to take some quarters and some economic like rebounding, but the banks aren't affected by interest rates. They benefit from higher interest rates. So it's just a matter of shaking out the loose loans, proving the economy is strong so the banks can stop putting loan loss provisions aside, and these earnings are going to come back. It is an inevitability, folks, unless real estate, a nuclear warfare breaks loose. It is going to take something so catastrophic to keep this down at this level that it doesn't make sense to me. So like, again, I'm buying, obviously, and I'm looking at other companies like telecoms, like TELUS, companies that are hitting record revenues, but aren't actualizing it on their bottom line because of the interest rates. And this is the cyclicality of the sector movements, right? Because tech had its day. You had your opportunity to buy tech. Now is not the time to FOMO into tech. I hope you got some exposure, but now is the time. Cost average in the S&P, take that extra gambling money and just start finding ETFs that represent some of these sectors, buy them individually. Because these are like world-renowned companies, right? Like they're insane. They're not like your typical. This is like if Apple in the Canadian economy was trading on a discount. Not that BNS is Apple, but I mean it's in the top 20 companies in Canada. I just looked at my portfolio. I haven't looked at my portfolio in a long time. Just enjoying the cash flow and the drips. Yeah, you could get along with my fiance better because I look at my shit far too often, and she owns all the speculative growth stuff, and she never looks. It's benefited her greatly. How long until we see BNS at 65 to 70? Zip Trader just made a video saying the big players are pumping the market. And so the big players just made a vid, saying that the big players are pumping market until the first week of January before dumping the market. There won't be a reason to dump the market, though. There might be a cyclicality of, traders and people just trying to take profits or do whatever, but you can't because earnings are too good. That's why the market can't crash. We've talked about this. The market crashed when earnings went down because people stopped spending money because they were scared of the interest rate cycle and God knows what the economy was going to do. Same during the pandemic. You see it in this chart. Even with BNS, you see like the pandemic lows and all that, but we're past that, folks. Forget there might be a cyclical pullback in tech or something, but we're on a new rocket ship, baby. It's just starting to launch. There is no stopping what we're currently seeing. Look at Google's earnings. Look at their revenue growth. Look at Amazon's revenue growth. We're getting back to somewhat of a normality. Again, not back to where we were, but we're much higher than where we were. So we're coming out of it, right? So again, you can look at things. We were just talking about this last week, like the Horizons equal weight bank ETF. I love that, like these Horizons. I gotta applaud them and give them a bit of credit. We need a bit more volume in this ETF to make it justifiable. But even without the volume, I mean, the company isn't charging you any fees right now. You could equally weight all the banks. You're not going to pay a single fee until mid 2024, until July, and even after that, you're only going to pay a 0.09% management fee. And in the meantime, you're going to get over a 5% yield across the banks. It's paid monthly. What more could you ask for? Thank God my parents are in their retirement phase because we are taking advantage of this. I'm telling you. Everyone's so scared. Even my mom right now, she's like, oh, wow, we're up quite a bit on some of these stocks that we've been buying. It's like, well, I'm like, we're buying probably the bottom of the market. What a time, October. So let's listen to Tom Lee Tom Lee's going to give us an idea here. And keep in mind, bank earnings, which we will be covering, is next week. Bank of Nova Scotia is on Tuesday. It's the first one, the most pivotal and fascinating one to watch with the highest yield. And then by the December 1st, I think most of them post on the 30th. And then by December 1st, we finish up, I think, with like Royal Bank and TD or whatever. So it'll be a fun week for the Canadian markets. But let's see what Tom Lee has to say, because this guy's always bullish. So it should be pretty much self-explanatory. But there are some fun anecdotes in here.
Is there anything that would change your mind about a rally into year end? Any key risks that you're focused on?
Well, I think the market to watch is interest rates. I mean, the 10-year, you don't want to see revisit those highs, the 5%, because it just tells us there's inflationary pressures building. You don't really want to see oil surge or geopolitical risks erupt. So I think as long as those three sort of remain in line, I think it's going to be a good December.
What are your favored sectors right now? Looking at just today's market, for example, we've got energy as the leader, materials and healthcare, while information technology and communication services are the laggards. Not necessarily the norm for this year, but where are you kind of focused on, the specific sectors that you believe are going to
get us into the
prosper?
sectors, baby. What are you interested in?
We think institutional investors are going to migrate towards liquid sectors. So I think FANG and tech still makes sense to own into year end. But I agree with many of those commenting today that breadth has improved. So I think small caps are part of this, if it's IWM, the ITF, or the Russell 2000. And then financials, I think, are pretty interesting here too.
So I love the way he points
Small
out
caps.
financials. So these are kind of the sectors that he's looking at, right? Technology, small caps, financials, and industrials, which are all great sectors because the industrials are going to benefit from like the crazy money printing the government's giving away. But again, financials is my core focus, but small caps, especially when it comes to things like the Russell 2000, are also very fascinating here. And like he said, and it's what I'm saying, unless some black swan event happens, there's no reason for the market to crash because earnings have recovered so greatly. And when you look at what's going on with the data coming out of Black Friday, the consumer still seems to be relatively strong, right? But when you look at the Russell 2000 and small caps, I've been digging to try and find the price to earnings multiple on like the general Russell, and it is very volatile. I mean, it's traded at extreme highs. I think right now it's trading around somewhere in the high 20s. I'd have to double check. But I'm very intrigued to see like what happens here because small caps, I have like this kind of problem again with like these smaller caps and tech companies because they trade at they're still trading at relative high multiples, and it's hard to tell if we came out of a crash and this was just small caps correcting themselves, because I work with small cap companies. And when I look at some of the valuations in them, like it doesn't make any sense. But then you look at some of the ones that sit at the top of the Russell and you're like, okay, well, the price to earnings multiple makes a little bit more sense here because, it's growing, but it's more just around a 30 times multiple than where it was when they were trading at like 60 times. But I don't know what the historical averages are. And I just don't know if it's due for a rebound. But if there's one thing that says, speculation is coming back. And I still think the best deals are probably in dividends, small, like you can just find companies that have just been beaten into the ground so hard. And that kind of just follows in suit that like the first most speculative market to crash that is now coming back is crypto. I mean, crypto got absolutely devastated, and I've been watching all weekend. I do not speculate on this. I've been looking at speculating on certain things, but because, certain conditions aren't coming into play that I was expecting to, it's just basically trading right now. Like a lot of this is just traders. Traders are coming in, they're seeing like a hot wave happening, and there's a lot going on. And basically Bitcoin leads the way. Bitcoin goes up and eventually it raises the lower half of the entire crypto market. But I mean, you look at things, I was looking at a lot of the smaller ones in like the gaming sector. The gaming thing is what interests me the most, but you look at Solana and stuff. And again, I know most of you don't care about crypto. Some of you probably do. We have very small exposure, but you can't help but recognize like when these things are running 303%, and that just happened basically like in the last month, it's up 76%. I mean, there's small cryptos that are running 100% on a daily right now. So there's a lot of speculation coming back to the market. And again, it just shows the sign of a more healthy market. When people are willing to speculate, I mean, it just shows you that we're returning to somewhat of a normality, because you go back a year ago and nobody wanted to speculate on anything. I mean, everything was just crashing like into levels that, I mean, go buy an NFT. You want to talk about speculation? God, NFTs. I mean, what even like the best ones were like Bored Apes, and they're selling at like, 70, 80% discounts. They're starting to go up, I think, now. A lot of stuff is. Binance news was definitely fascinating. It was interesting. And I think he just did that because he knew the inevitable was coming. And I honestly, I think it's better for the space. I think what we're finally, in the US anyways, you finally wiped out the bad actors. So now like good institutions come in and ETFs and, you know, all this other stuff. But for the time being, it's still a lot of speculative crap. And I've said this before, most of these cryptos we're looking at, give it 5-10 years, hardly any of them are even going to exist. It's all just gambling right now. And if you want to gamble and speculate, you can make a lot of money in these bull runs. And I'd recommend it, honestly. If you're into trading, there's nothing better than trading cryptos. You just have to recognize you're trading the stories, not the actual fundamentals of these things. They're just, there's no business behind any of them as it stands in this moment. That's why I really wanted to invest in the gaming cryptos, because I get that a lot more. It's more within my sphere of competence, and there's businesses I understand behind them. But the problem now is like this bull market's coming back, but the gaming side hasn't actually gone anywhere. I thought that would have taken another year or two, but it's like it's happening now. So I'm just trying to avoid it. Yeah, I call that NFTs were the they were bad, man. Man, you want to talk about you know, seeing things go to zero? I mean, I think 90% of NFTs basically went to zero. CZ went to you know, basically was set up by BlackRock as his biggest competitor, probably. But again, I think BlackRock and these companies that are running these ETFs, they're trying to play the speculative game, but they're taking a huge risk into the future. Because, you know, a Bitcoin is great. I just don't know if it's hard to say, because Bitcoin's the biggest. Everyone will build the ecosystem around the largest crypto because it's going to drive the most demand. But the problem is, I don't know if Bitcoin's the most efficient, and if it will continue to be. Everyone thinks, I don't know. Honestly, I don't know. Hey, everyone, let's work and invest together. I agree. That's why we do these wonderful streams and taking a look at the broader markets. As it stands here, because again, the markets in the US were basically closed. So the only thing we're trading off were the Canadian markets, which, you know, we moved a little bit here. We saw the banks move up a little bit. But really, that's the only thing that's been going on all weekend, is just watching the insanity of gamblers on crypto trading. I'm sure this was one of those weekends where everyone's playing like fantasy football, and that, you know, you're with your family and gambling and all that stuff probably coming back, which would make a lot of sense. But honestly, you know, just watching the watch list here with things like Verizon, I'm still very intrigued by. I get this through SCHD though, but I could name like these things would be so good to buy on their own. I really wish I should just buy them. You can't help but recognize there's some really good value out there. And at least, you know, SCHD and these dividend ETFs are trading at things I can understand, these price to earnings and all this stuff. I hope again, and I recommended this on my other stream, where I'm like, you really need to kind of come up with like a 4-fund strategy that kind of represents the different aspects of the market. Like, you want to have growth, you want to have income, like you want to have like the broad markets like the S&P, and you kind of want to float between them, right? So like when speculative growth is kind of trading down, you want to put more money into the Qs. You know, when these dividend stocks are getting wrecked, you kind of want to rotate back into the dividend stocks. When the market's a little bit more equal, just take the dividends and invest a little more in the S&P 500, you know, and just kind of float between the cyclicalities of it. Because in these days, I don't gamble like I used to, man. I'm definitely I have some small caps. I'm starting some new jobs. I'm likely going to take on some private shares in some more companies. But that is so beyond like what I used to do and speculate on Tesla and all these companies. And I still love them, but I just recognize that we're not going to see what we saw in the past. And it's just a lot trickier than it is unless you really understand industries very well. But I mean, we were making like 500 to 1,000% gains off MindMed. I mean, if you guys didn't go watch Dumb Money, and if you grew up and you had some of that nostalgia of like the peak market in 2020 and you made some money, I mean, it'll really give you a good sense of like how delulu you were, like, because everyone got so cocky, and I got cocky. I was like, man, we're making money. Jeremy got cocky. I think Jeremy is like the prime example of what happened, right? Everyone thought they were a genius. They over leveraged into things that were highly overvalued and junk, and those that didn't get out got wrecked. I'm very fortunate to get out, whereas people like Jeremy just kept with it and lost so much, like millions of dollars, man. Millions. I think it was an interesting and fascinating period, but I've kind of recognized that until we get back to 20% growth rates, it's hard to anticipate what the market's going to do at this price to earnings multiple. It's just too much. Why do you buy? Everyone asks me this. What is with you guys in VFE over VOO? So like my parents in retirement will just buy VFE, right? My parents, they need the money. They're going to collect the dividend, and that's not what I want to look at here. So I mean, like, it depends on your circumstance. I like controlling the US dollar. It's a global currency. I can pull it out of my investment accounts. I can spend it in Canada. I can spend it abroad. I can spend it everywhere, and I just don't. I like US dollars, and it diversifies my income because most of my income is made in Canada. Part of my business makes US dollars, but unfortunately for me to gain access to it, because PayPal's an absolute bitch because they don't let me. So PayPal, I still have a stick with. If you use PayPal, you work internationally, you might use it. You might be like, okay, PayPal, international funds, it's easy, it's safe, it's blah, 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 blah. Once upon a time, like 2 years ago, 3 years ago, PayPal said, hey, No, it wasn't even 2 years ago. I think it was like maybe a year and a half ago. PayPal finally they're like, we need to make more money. How can we be greedy? What can we do? Oh, we see people just pulling US dollars out of their account. They're making foreign currencies and just transferring them to their bank. We can't have that. If they're going to do that, we need to transfer the currency for them. So if you get USDs and you live in Canada, well, you can't touch that without converting it to Canadian dollars, even if you're going to put it into a US bank account. And it royally pissed me off. So I tried to go into wire transfers. But that's the best thing about the stock market is I can make US dollars in a US account and pull it out tax-free and spend it anywhere I want. And it's so much better than Canadian dollars, especially if you travel. So that's why I just like VOO. I'd rather pay the fee up front to just do the currency conversion. You pay less on the management fee because VFE has a bit of a higher fee. But for most people, VFE is the way to go, all right? Like you probably just want to stick with VFE. But as you've seen my portfolio, like I am just vastly invested in the US markets, and I don't have any of that converting to Canadian currency. All the dividends I make from VOO, all the capital gains I make on SCHD and these companies is 100% US dollars. And that's probably how it'll remain into the future because it's just, again, the dominant currency. And if the US dollar ever lost dominancy, who knows? Maybe I'd invest in Chinese companies and start collecting the yuan or maybe it's the euro or the pound. Who knows? I'm glad I don't live in the UK, man. Their gas prices are absolutely bonkers right now. And speaking of problems in Canada and globally, when it comes to currencies and bullshit, man, are people getting raked on real estate? I don't know how many of you guys, a lot of you seem to be Canadians. What do you think is going on in this real estate market? Because a lot of you came to ask me about some of these REITs. Maybe we'll talk about a couple of REITs and finish up here and talk about it. Someone's saying I'm making between 7 to 8% dividend yield on my utility ETFs. Utilities are a great buy here. They'll be part of that recovery. In my I like to have VOO in my RSP and VFE in my TFSA to be current. Yeah, that's fine. I mean, there's nothing wrong with it. Either or, they're both great ETFs. Pick your poison. I mean, there's no big difference between this. Yeah, everyone saw this on the news. Everybody, TikTok is blowing this sucker up. It's quite funny actually, because this is like the microcosm of TikTok. If you watch anything about Canadian real estate on social media, it is detrimental to your mental health because you're going to think the entire real estate market is collapsing. But as I've shown you, and as I do every month when I review the Toronto Real Estate Board statistics, the average price of a home seems to continue to go up. But when you watch TikTok, you're going to see things like this, where people are getting wrecked and real estate's crashing, and you can go buy a castle in France for the price of $1.5 million, shoebox here.
Of doing anything illegal, but they say they expected better.
It just shows that they really don't care and that they honestly are just money hungry.
Maybe we'll speed this up, but just take a quick listen. These people got wrecked. They lost like $130,000. It was really bad, and it's just so convoluted in the mess. This is why you need lawyers. When I had the deal, and I still haven't talked about it, maybe one day I will. For those that are OG, we had some really horrible things go on during the real estate crash, and we had to get a lawyer. And this lawyer always laughs because he's like, everybody gets a lawyer after shit happens. They never consult a lawyer going into something. And God, did we learn a lot through that stressful crap. But these people got like way worse off than anything that happened to us. I mean, way, way worse. Let me just turn this up real quick.
Only to watch it slip away, along with a lot of money. The couple says they have lost nearly $150,000 and say it could have been much worse. CTV's Jeff Pickle is following that story for us tonight and joins us live. And Jeff, this really seems like a nightmare situation.
Well, Alex, it really is. And the couple says they hope they can prevent something similar happening to someone else. They describe it as an emotional roller coaster. And the ultimate ironic twist, they actually consider themselves lucky to be out only $142,000.
This is the Guelph home Joe Jennison and Alicia Morel thought they were moving into.
It is very depressing.
This is where they live instead, renting a room off a friend in Hamilton. Their housing journey started in the spring of 2022.
And we're like, hey, let's get a new build. The market was pretty decent at the time, I believe.
Both 32 years old and engaged, Joe and Alicia were looking to buy their first home. If you're losing on.
Oh, I just want to point out that when we were buying our condo, we looked at new builds, and they are the biggest ripoff imaginable. We got a quote for a new build, 850 square feet. They wanted $900,000 plus 60 grand for parking. By the time you're all in with closing costs, you're like $1 million into 850 square feet. Do you know how tiny 850 square feet is? It's laughable almost, right?
On several bids, they were eventually successful.
Money was actually put down, so we went, that's it. We made it. We got our house. We were super excited.
But not long after the deal closed, the relationship with Fusion Homes started to sour.
So initially, Fusion released an email with a few incentives just to kind of entice some buyers.
They say there were around $100,000 in incentives and $100,000 in free upgrades available for new buyers.
It's not the fact that we aren't getting anything at all and we're stomping our feet and upset saying we want this too. It's the fact that they've devalued our house before we've even literally looked at it. Our house has been devalued by Fusion by over $200,000.
Then another bombshell, occupancy fees.
Occupancy fees are basically rent to the builder until the condo corp is formed. All of that money doesn't go towards the house at all. It goes straight into the builder's pocket.
They were initially told maintenance fees would be $309 and occupancy fees would be $3,250. But 2 days before closing, the couple was informed both fees had nearly doubled.
I was at work that day when I got the email from the lawyer saying, hey, I need 6 post-dated.
The worst thing about this too is you sign this in the contract. Like that's the, like, because you're like, oh, woe is me, right? But this is the problem without, especially buying new builds, without having a proper lawyer review the contract before you sign it. Like, thankfully, we've had really good lawyers through the process of everything we've done, but like, you need to understand this. Like, there are a lot of clauses in there that allow them to manipulate a lot based off market conditions, and then you end up in situations like this.
It checks for basically $6,600.
We calculated at the 6 months of checks is about $40,000. That's literally just going down the drain.
Without a determined end date for occupancy fees, Joe and Alicia decided to try and terminate the deal. Joe and Alicia were let out of the deal with Fusion Homes by agreeing to forfeit their down payment, and Fusion agreed not to sue.
Yeah.
And that's sad that we were relieved to lose.
That's just it, right? Like, they were going to pay out 40, 50 grand over a year. They lost over $100,000 in incentives. They devalued the homes like sales, and they just got wrecked through the whole process, right? And it's painful. It's probably like the worst thing imaginable, because like me and my mom, like, we've been through a lot of shit, and we just joke about it because we're like, you know, we're lucky. Like, we have controllable expenses. We have a house. Like, we all have places to live. We got supportive family. Like, you got enough for your retirement. Like, we're good, right? These are people just trying to start their lives. 32, boom. They probably saved up for 4 or 5 years and just wiped it all out. And now it's like starting from scratch. Like, you know how painful that is? And like, oh God, you know, it's just the worst. I feel so bad for them, but I don't know what to say, right? Like, we're in scary times, and it's just, and I had to learn the hard way. Unfortunately, a lot of us had to learn the hard way. It's just, it's an unfortunate reality, right? Yeah, but they brought pre-construction without due diligence. I'm a real estate investor, and I wouldn't touch pre-construction. So here's the thing too, right? Like, I'm curious if they used a realtor, because like you're saying, right? Like, if you're a real estate investor, even if you're an individual, would you just walk up to like a pre-build and say, oh, I want to buy this, without like consulting like a proper real estate agent, a lawyer, or anything? Like, did they just go in and sign the paper? I mean, because clearly they got taken to the cleaners, which is just so sad. If I lost that amount of money, I would not be that calm in the news. I would be broken inside. Yeah, but again, we went through something semi-similar to this to some extent, and it was very contractually based. And again, we had a good lawyer. We fought. We dealt with legal crap, and it really sucked. And like, it was probably some of the most stressful crap I've ever gone through in my life. But at the same time, like, you have to accept the reality of what you've done to yourself. And that's like the hardest thing. And these people, I think, have come to terms with it. Obviously it sucks, but like, you really have to accept that, like, sometimes there's just nothing you can do because you signed the dotted line. And when you're in that legal binding, like, you have to bend over. You know, unfortunately, if they take you to court, I mean, they could sue you for all those lost wages, right? I mean, they could literally, like, if the construction company said, no, forget you, like, you said you're going to buy this and now you're not, and we're not going to be able to sell your property for the same value. So now we're going to sue you for the loss of the value for whatever it sells for. We're going to sue you for those fees that you owe us. I mean, it could have cost them up to like 300,000 or 400,000 realistically. So, I mean, you know, it is what it is, but it's the reality of the real estate market today. And you have to be like super diligent because there's a lot of fluctuations in prices in specific areas. But at the same time, and I'll state this again, it is by far the best time to possibly buy real estate. A guy that I work with just bought a piece of real estate with his I think, I don't know if it's his fiance or his wife, but you know, they're young people and they kind of said the same thing. Everyone's beating them down saying it's the worst time to buy real estate, but you know, they negotiated, they got it undervalued. And you know, in a couple of years, you could probably negotiate 2 or 3 years, whatever you're locked in at, negotiate the rate. You can always negotiate interest rates. You cannot negotiate once you've purchased the home price. So get the best home price you can when you're not in a bidding war, and, you know, get yourself some comfort. I honestly, like, if it wasn't for this market environment, I probably would have never bought real estate. It's just like that calling comes out of you, like buying Canadian banks. It's just like, sometimes you've learned enough about the market. These wonderful opportunities present themselves. And when you're not stupid, you're just like, you know, these people don't get it, but I see something here and I'm going to take advantage of it. And who knows, maybe it was a dumb decision, but it feels like we did the right thing. So you can only do what you can do and try your best. But if there's one thing I've learned, man, get lawyers if you're doing crazy shit. we got lawyers. I mean, just be very careful and diligent and make sure you have the right people in your corner. Don't do anything willy-nilly. Be patient. Take your time. I mean, we must have looked at 30 or 40 properties before we bought this one. Like, there was no rush. You don't have to rush into anything. Just like you don't have to rush into buying bank stocks or do something silly like buying tech companies or things that are going crazy bonkers right now, because usually you're going to regret it or you're going to do something silly. And I'm probably finished the stream up here, folks. I appreciate you all stopping by for this Sunday evening. I hope you all had a wonderful, weekend here when it came to shopping, if you did any holiday shopping. But I still got to do a video, as many of you requested, to do a shopping list of my food and my Walmart list. Also, we had a good family get together. We were just joking about like why people think it's so expensive to buy groceries, when if you saw my grocery list, like $50 goes a long way. If you're couponing, if you're looking at like the I'm getting rid of aisles they have today at Walmart, at the dollar chip aisle, we're not buying Doritos here, folks. gotta keep everybody diligent and frugal so we can all be financially free in one of the tougher market environments we're all explaining today. Talk about the brown end of this. Have a great week, everybody. Stay cool, stay awesome, folks. As always, I look forward to catching you in the next one. Peace.